Caroline Wood standing by. Let's talk some stocks as we look at the macro conversation. Great one, but we're kind of muted right now. Not a lot of big moves. So let's go into some companies, Caroline. Let's find some action. Kroger up 2.5%, kind of continuing some of the strength off the lows from yesterday. But I guess the market got what it wanted because they've got a tough little thing going for them right now, having to navigate fee potential, the Albertsons deal. It's been kind of a fun drama around this stock.
Yeah, and shares are picking up some steam here. They actually opened pretty muted. There wasn't a whole lot going on, but in the past few minutes, they've been adding to their year-to-date gains. Now up about 2% right now after a mixed report, actually now up about 15% year-to-date. Earnings beat, but revenue missed. If you take a look at the numbers, adjusted EPS of 93 cents, topped analyst expectations by about 2 cents per share. Revenue rose slightly by about 0.2% to $33.91 billion, but the estimate was for $34.1 billion. So it was a miss on the top line. Same-store sales, excluding fuel, were up 1.2%. Digital sales grew 11%. There was an increase in total households, customer visits, and loyal households. In terms of the outlook, the supermarket chain reaffirmed its fiscal 2024 adjusted net earnings per share of $4.30 to $4.50 outlook. The Wall Street was looking for about $4.44. So that's still very much in line, but now expects same-store sales, excluding fuel, to range between 0.75% to 1.75%, compared with the prior guidance of a 0.25% increase to 1.75%. The company said solid sales results in the first 2 quarters of the year gave them the confidence to raise the low end of that outlook, adding our positive customer trends are driving sales momentum that we expect to continue in the second half of the year. You mentioned the Albertsons deal. Obviously, that's a pending $25 billion merger with the other supermarket chain. The CEO, said in some prepared remarks about that. As we near the close of the FTC's preliminary injunction hearing, we are confident in the facts and the strength of our position. The food industry has always been competitive, and we will continue to be after this merger. So there's a conference call at 10 a.m. Eastern time, so in about 20 minutes. So we might get some more color in terms of the consumer, in terms of that deal as the hearing kind of wraps up. But shares up about 3% right now following this report.
It's pretty good, kind of the least that we could get, but there's been plenty of strong bear cases for the stock. I mean, that's kind of what we were thinking about coming into this, is just the financial burden of what they're doing, the kind of like make or break approach that they're sort of taking with this, basically putting $1 billion of fees on the line, like $500 million for the breakup fee, roughly. I think it's like 400 mil. And then they've already spent, one report said like 400 mil, something like that. So, I mean, there's, committed to closing. It's like kind of a binary outcome, I feel like, because $1 billion hit would be a pretty bad sunk cost to have to eat.
Certainly would, and that's why the commentary, at least from the CEO, seems positive that they think they're going to get this deal done. You don't put that kind of money on the line unless you're confident that you're going to. But, as they wrap up that hearing, I believe it's supposed to be wrapped up on Friday with closing arguments. So, hopefully time will tell, safe answer, but it seems like maybe we should know sooner versus later.
Yeah. Okay. They are really going for it. You got to respect the ambition, I guess, because it's so clear right now that this is like the least favorable environment for this type of stuff. The government has been cracking down on everything. There's like other bills out about trying to crack down on the grocery pricing. So it's just like super hot button, and they are absolutely going for it. So, all right. But it is kind of a binary story. Let's talk OpenAI. Let's talk some tech here. $6.5 billion funding round. Valuation basically keeps getting inflated. And whenever there's money going to this company, generally the conclusions by the market are that it's going to flow down to the chips and everything else.
Well, yeah, we're talking, of course, about the maker of ChatGPT, OpenAI. It's looking to boost its valuation with this new funding round. Bloomberg reporting that they're looking to raise $6.5 billion. The Financial Times is saying at least $5 billion at a valuation of $150 billion. So the funding round is slated to be led by Thrive Capital. Microsoft, which of course is the largest investor, is also set to participate according to these reports. And then Apple and also Nvidia have been in talks about investing. The FT said they're still discussing the size in terms of their involvement, but that $150 billion valuation would be a huge jump from the $86 billion enterprise value back in late 2023. So looking to really, move that number higher. At the same time, according to Bloomberg, OpenAI is also reportedly in talks to raise $5 billion in debt from banks in the form of a revolving credit facility. So, I think that obviously you can't check OpenAI stock, but you can check what big tech is doing today, seeing a little bit of a mixed picture as you talked about at the open. But the one company you really kind of want to take a look at is Alphabet, because OpenAI has already discussed plans to go into search, which could, of course, put pressure on Alphabet's Google, but it doesn't seem like Google shares right now are under any sort of pressure. They're actually up almost 2%, whereas Apple is lower, Microsoft is lower, Nvidia has turned higher, though.
Okay. Yeah, right now it seems like we're getting a little bit of strength. A few of these kind of iffier names are holding in all right. Nvidia on the positive side after being a little negative, so we got a little percent kind of swing there. That's not bad. Hey, one more though on the move this morning. Moderna trying to, I guess, be a little bit more frugal, perhaps, cutting some expenses.
Yeah, you said there's not a lot of big movers this morning. Well, Moderna is one big mover. Shares are down about 15.5%, adding to already steep year-to-date losses after outlining future plans at its annual Research and Development Investor Conference. Plans include cutting costs and pausing or ending development of some drugs in order to save some cash. The drug maker obviously is really trying to chart this path forward after declining COVID sales. But they did announce plans to slash expenses by $1.1 billion by 2027 in light of, quote, recent commercial challenges. So they aim to cut R&D spending to a range of $3.6 to $3.8 billion in 2027. That's down from an expected $4.8 billion at the end of this year. They said that they anticipate the launch of 10 new products through 2027, but at the same time, they're pausing some work on products, or actually ending some work on products, as it aims to pace itself in new research and development spending. They're discontinuing 5 programs, including RSV for infants. They also said that they have 5 respiratory shots with positive phase 3 results and expect to submit 3 of those for approval this year, including a vaccine against RSV in high-risk adults ages 18 to 59, and then the combination COVID and flu shot, and then a more effective version of the COVID shot. And they also announced some positive data on the experimental flu shot for adults ages 65 and over. And then they said that they have 5 non-respiratory products across cancer, latent viruses, rare diseases that could be approved by 2027. And then just in terms of the outlook, they now expect 2025 revenue between $2.5 to $3.5 billion. The estimate was for $3.95 billion. And then for 2026 to 2028, they expect a compound annual growth rate of over 25%. Driven by some of those new product launches. So obviously that 2025 revenue falling short of estimates, it doesn't seem like anything's really impressing investors right now, based on the fact that shares are now down almost 18%, now down, 34% year to date.
Huge disappointment on top of the last earnings too. Disappointing there, but this is really kind of the kitchen sink, it seems like. But again, I mean, who knows if the projects that they are on are going to be, if they've narrowed it down to absolute solid winners. I didn't realize, I guess, how much they were throwing at the wall and nothing stuck. I mean, like, the kind of hope was that obviously this process would have like a bunch of other great obvious applications, and it sounds like it's just too expensive to continue trying and failing to find some. So it's it's kind of a jugular for the stock at this point. Appreciate it, Caroline. Thank you very much. Good eyes there. Sure. 18% almost down for Moderna.